Joining me now from Portland, Oregon is Gil Luria. He's head of technology research at Davidson Companies. Gil, it's great to have you on the show today, and we've seen some pressure on NVIDIA's stock. How are investors interpreting what we heard from CEO Jensen Huang?
Well, there are a lot of great developments. The rate of product introduction from NVIDIA is still incredible. Every generation of products is a lot better than the previous generation. They're running so fast, it's going to be hard for their competitors to catch up. The challenge for NVIDIA, especially the NVIDIA stock, is expectations are always so high from NVIDIA. They've been able to accomplish so much over the last couple of years that just incremental improvements are being received by the market with a little bit of a shrug.
You know, it's interesting. Just overnight, Gil, we heard from Nike, we heard from FedEx as well, two NYSE listed companies, that they are preparing for uncertainty, that it is impacting their results. But we had actually heard from NVIDIA's CEO earlier this week that tariffs shouldn't significantly hurt its financials, at least not yet. Why is that?
I think that's a little bit of wishful thinking. NVIDIA's supply and demand go cross borders, including in and out of the U.S. So any tariffs on either the components that go into the products or the products themselves, retaliation on our tariffs, will likely have at least some impact. Having said that, we mostly are really just shipping from Taiwan to the U.S. and inside the U.S. in terms of what NVIDIA is doing, and then from the U.S. to Singapore, where it gets distributed to the rest of the world, really. So unclear how much of an impact it will have, but just like any other physical goods shipped in and out of the U.S., if we have global tariffs, there's going to be an impact.
We do see the stock off double digits from its high. Do you think this is an opportunity to buy, Gil?
I think the risk reward on NVIDIA is quite balanced right now. The potential for AI to continue and the build out to continue is there. If that's the case, there's upside to the stock into next year if they continue to grow at the rate that's expected of them. However, if this is peak year for data center build out, which it might be, we've gotten some hints in that direction from Microsoft and Amazon, then there's a lot of downside to NVIDIA's stock as well. So where we are right now appears pretty balanced between that upside and downside.
Gil, what else can you tell us based on what we heard from NVIDIA this week about what it means for the broader semiconductor space and the technology space too?
So within AI, the investment continues and NVIDIA continues to lead the way. They still have overwhelming share within the semiconductor market, and that's changing very slowly. At some point, their customers, especially Google, Amazon, and to some extent Microsoft, will be making their own chips with Broadcom and Marvell, but that's a gradual process. For now, NVIDIA is leading the way, and as long as the AI build-out continues, NVIDIA will continue to be the main beneficiary from that build-out. The only risk is what happens if those companies, if their customers decide not only to slow down the spending, but to use more of their own semiconductor.
Based on what else we've heard this week, Gil, in addition to NVIDIA's conference, remarks from the CEO, we did get a Fed decision as well as remarks by the Fed chair. And we have heard from other companies, as I mentioned, that are noting the uncertainty. How does that shape the investing landscape in the short to medium term?
So for most technology companies, their markets have already been pretty tough the last couple of years. Most software companies, most technology companies were in a hangover after the big COVID splurge. They were in a hangover for most of 2023 and 2024, and then things stabilized. So the enterprise buyer of technology is actually relatively stable right now, as other sectors of the economy, like consumer, like industrial, may be softening. The technology sector could actually be more resilient. That's why we're now going more into overweight position on the Mag 6 and on software especially, because those companies have already been dealing with a tough market. It's not going to get that much tougher, while consumer companies are going to be dealing with a much tougher market.
Interesting. So you think maybe there might be a bottom approaching, at least for some of the sell-off that we've seen, which has been outsized in technology, at least of late?
It's been mostly multiple compression. I don't expect to take down numbers for most of the companies that we cover in technology and in software, not significantly, but within consumer, again, as you pointed out, FedEx and Nike are reducing numbers, and that's been a growing trend for consumer companies over the last few weeks, and that's still with only limited information. If the consumer slows down further, we're going to see more of that.
All right, Gil Luria, head of technology research at DA Davidson Companies. Gil, thank you.